For the last 20 years, 500 pence has been a safe level for HSBC share price. But that seems to have changed since the beginning of this year, and I want to know why, and I want to tell you whether it's actually ever going to get back to that 500 pence level. What is up, people? My name is Ben and this is the Capitalist Investor YouTube channel. Welcome. If you're new to the channel, on here we talk about investing, personal finance and everything in between. If it sounds like something that you would be interested in, do consider hitting the subscribe button just below to make sure that you don't miss any more of this content. Thank you. It's easy to blame the coronavirus for the downfall of HSBC's share price, but actually you're a bit naive if you do that. And actually you need to look outside of the coronavirus to really see what happened to HSBC. You may have heard, and if you've seen the video on the Property Hub Investors YouTube channel, you'll see an interview from Robert Kiyosaki where he makes an astounding prediction for the future of HSBC and banking in general. If you don't know who Robert Kiyosaki is, he actually wrote one of the most popular personal finance books in the world, Rich Dad Poor Dad, and I would recommend highly that you go and check that out and give it a read if you love anything to do with investing. So what was his prediction? Well, his prediction was that bankers will no longer be there. He said HSBC is already collapsing and it will be replaced with something else. The world will no longer have a currency like the US dollar and GBP, and it'll actually be gold that's traded or Bitcoin that's traded. Now, I think this is a bit of a wild prediction from Robert Kiyosaki, and I don't particularly pertain to agree to it. I think that there'll always be a role for bankers. I think the banker role is currently changing. I think, with the introduction of Monzo and, other banks, online banks like Starling Bank, I think the world of banking is changing. But I don't think it's disappearing forever. And so what he's saying may potentially come true, but I don't think it will. But anyway, let's look at why HSBC share price just really hasn't been performing very well. So if you, like me, put money in your bank, you'll know that the interest rates are historically low. And those low historic interest rates mean that banks lending their money just aren't getting the return they need to really help with their financials. And regulatory changes really haven't helped businesses and banks like HSBC. If anything, they've made them ring-fence money that they could be using to invest or, lend to people. They've been made to ring-fence it so that it's protected for the consumers like you and I. And this has meant that, the mortgage market is completely competitive, and what you're seeing is mortgage providers are really slashing down their costs to compete against each other. The performance of HSBC shares has been affected by legal issues that the bank has faced. While you'll be familiar with, Lloyds and HSBC being imposed fines in relation to PPI and the PPI mis-selling here in the UK, what you may have missed is the bigger issue that underlies at HSBC in relation to money laundering. Now, for those of you that don't know, money laundering is effectively putting illegal money back into the system. So effectively transferring bad money into good money. So for instance, drug money, you then manage to get it through the process into your bank account, which you can then withdraw and use as clean money. Obviously, this is illegal. And actually HSBC were found to have not done the checks properly and allowed drug money from Mexico into their banking system. This led to a whopping 1.9 billion fine in 2012. And you would be hoping that these misdeeds that were back in 2012 would no longer be in the business. But unfortunately, you are far from correct. There's recent reports that suggest HSBC still has exposure to risks in relation to money laundering. Although it is worth remembering that they haven't currently been accused of any more wrongdoing. But there is more problems, guys. HSBC's Asia focus has always been a problem for UK investors. Although it's massively attractive, as it did provide UK investors that, long-term potential growth from the region. But the US-China trade war has really affected the ability for UK investors to get exposed to that market because the trade war is just causing huge problems for the investors and the volatility in the prices of goods from those places. And ultimately, guys, most of the profits that come into the group is coming from Hong Kong. And so management may be forced to put their Chinese interests at the heart of the business ahead of other interests. So what does this mean for HSBC? Well, HSBC is going through a tough time at the moment. But the good news for you and I as potential HSBC investors is that there is a bright future ahead for HSBC if you can look past everything that's currently going on. And actually everything that I've previously mentioned is already baked into the price that you see for HSBC. So as long as nothing else goes wrong, why would the price ever continue to decrease? It's actually currently trading at half its book value, which is pretty mad statistic, that's how much it's been punished for all of these previous things that I mentioned. And unfortunately, shareholders are currently going without a dividend, which was cut. Well, they were basically forced to cut them along with the other UK banks during the crisis of COVID. And I don't think it's been massively helped by these schemes from the government whereby they've had to lend money that could potentially go bad. But there have been hints recently that the shares and the dividends that are being paid out are likely to recommence, either in the short term or back in 2021. I'm not predicting that they will actually pay a dividend in 2020. I think it's very unlikely. I think HSBC being one of the ones that's been penalised the most with its other fines as well, I don't really think it has the cash to be able to pay out dividends to its shareholders right now. And actually what we're seeing is brokers are forecasting that the dividend in 2021 is forecast to be about 50% of the level of the dividend that they were paying in 2018. So again, this will all be baked into the share price that's driving it down. And actually now that I'm talking about this, I could see that the share price could be actually going down a bit more if they do decide that they're going to cut a dividend when they do recommence. And I do think that the impacts that I've been talking about really do affect this business and actually do affect the longer term longevity of this business. And although I do think that this bank can get through this short term crisis that it has, do I think my money is well placed in HSBC right now? The answer is no. I think there's probably other banks that are also been affected by this, but are in a much better position to come out of this, which I think money would be better placed. And if you're interested in what those companies are, guys, do let me know in the comments below, and I can be sure to do a video on that as well. So will the HSBC price ever get back up to 500 pence? I actually think they will. I think it will get back up to 500 pence, but I think it's going to take a hell of a long time. And I think investors face a lot of risk in doing so, waiting for that to happen. I wouldn't blame long-term investors for sitting and waiting for it to happen. But for me, it's not a place I want to enter. It's not a position I want to start. And for me, I won't be putting money in it at this level. I do see the potential for it to get back up to the 500 pence. But for me, it's too long and my capital could be deployed elsewhere. And in particular, I think the dividend piece really does hit home for me. If they're not going to pay a dividend this year, and it's likely that even if they do pay one in 2021, it's going to be half the value of 2018. For me, I don't know what else benefit am I going to get if the share price is not going to get to 500 pence back to normal levels. I'm not going to see the growth. I'm not going to get the dividend payment. So why would I invest? There's surely got to be other places that I'm better off putting my money into. So there you go, guys. That's my views on HSBC at the moment. Ultimately, I do think it's going to get back up to that 500 pence per share. Not right now, probably not in the short term, but I think it will eventually get back there. I think the thoughts from Robert Kiyosaki in his interview were really interesting, and you should check out that video that's on Property Hub Investors YouTube channel, because it is really interesting, and some of the things he talks about in terms of investing in gold and Bitcoin are really interesting. I can't pertain to agree to all of his views, but yeah, guys, go and check it out and let me know what you think of that. If you've stuck with me till the end, guys, please do make sure to smash the like button on the video. Until next time, I've been the Capitalist Investor. You have been YouTube. And until next time, please do make sure that you subscribe to the channel so that we can make it to 500 subscribers. Thank you.